Hi, I'm Terrell Turner, one of the co-founders of the TL Turner Group. And around this time of year, I get a lot of questions about taxes because I am a CPA. So, it's only natural that a CPA will get a lot of questions about taxes. And one of the big questions that I've been getting is, hey, why are my tax returns lower this year than they were last year? Well, there are a couple of reasons why that may be the case. But before we jump into explaining the main three reasons why that may be the case, let's just think about how a tax return actually works. Now, this is going to be an overly simplified version or framework of how a tax return works. So, here we go. You would take your income and then you would subtract out whatever deductions you qualify for, whatever credits you qualify for, and then that gives you your taxable income. The IRS then takes your taxable income times whatever tax rate is relatable to your taxes. And then that number will tell them, hey, this is how much you should pay in taxes. And then the IRS looks and says, how much have you already paid in taxes? Whether that's through your employer withholding taxes from your paycheck, or if you own your own business, you've been making payments throughout the year. So then the IRS will say, what should you have paid versus what have you paid? And the difference will either be a tax return or it will be a tax bill. Now that we understand how the tax return works in a very high level, let's get into the reasons why your tax return might be smaller this year than last year. Number one is if you're making more money. Now, I tell you, if you're making more money, I think that's great. But when you look at your tax return, if you are making more money this year, you might be in a new tax bracket. So if you are in a new tax bracket because, hey, you got that raise or you got that great new job, you got that promotion, if you are in a new tax bracket, you may be paying more taxes this year than you paid last year. Now, number two, it comes down to your deductions. Now, this area can get a little tricky. Now, so I'll keep it simple to keep from going off on a tangent and getting stuck in the mud with the details of deductions. Now, there are two main deductions I want to focus on, your standard deduction or your itemized deduction. Now, the standard deduction is the government saying, hey, we will give you this freebie deduction, or we will give you the option to itemize your deduction. Now, when you itemize your deduction, it's things like your student loan interest, the interest on your mortgage, or if you've given charity, different things like that. Now, in this year's tax return, the standard deduction is $12,000 for an individual. If you have given in charity, or you pay, mortgages, or you pay your student loan interest, or other things that qualify for itemized deductions, if you have given more or paid more than $12,000, then you're probably going to itemize your deductions. But if you haven't, then you're probably going to take the standard deduction. And if you look at your tax return last year, did you take a standard deduction or did you itemize? So you want to look at, okay, last year, if you took a standard deduction last year, then more than likely that's not the reason why your tax return is lower, because actually the standard deductions are higher this year compared to last year. Now, if you're taking an itemized deduction, there are some things that you used to itemize last year that you won't be allowed to itemize this year. So that may be a reason. Now, the third one. Now, from all the tax returns that I've been looking at and the W-2s and the different filings, what I have noticed, number three is a very, very common one for a lot of people this year, is that you have paid less in taxes this year than you did last year. What that means is when you've been getting your paycheck each week throughout the year, your employer has been taking less out of your paycheck and allowing you to put more money in your pocket every payday. Now, it might be an extra $5, it might be an extra $10, or it might be an extra $20, which on an individual check, it may not make a big difference. But if you get paid every 2 weeks, you take whatever that number is times 26, and it starts to add up some. So you want to look and see, okay, all right, have you been paying less in taxes throughout the year? Now, there are different ways that you can do that. Whether you've increased your, I guess you'd say, your deductions on your paycheck, or you've told your employer, hey, I want to increase the number of tax withholdings that I have, which means they took out less on your paycheck. Or maybe your employer just made an adjustment in your, I guess, your payroll process. So that's probably an area you want to look. So if you're looking at your tax return this year and you're comparing it to last year and you're saying, man, it's smaller than what I got last year, 3 areas you want to pay attention to. Did you make more money, which actually is a really good thing? Did you make more money, which means you're in a higher tax bracket? Or are your deductions smaller this year compared to last year? Or did you pay less taxes throughout the year? So now when you get your tax return is smaller. Those 3 areas are probably gonna tell you exactly where and why your tax return is a little bit smaller this year versus last year.
Thank you so much for checking out today's video. To get more free helpful content, you can follow the show on all of the major social media platforms. On Instagram, we are at 60 Second Money. On Facebook and YouTube, we are TL Turner Group, or you can follow Terrell on LinkedIn at Terrell A. Turner. If you have a specific topic that you would like featured on the show or have any questions, you can comment below, or you can shoot us an email at contact@TLTurnerGroup.com. We will try our best to get it featured on the next show. Until next time, peace.